Good afternoon. Getting right down to business here. We're doing it live, doing more at 4 weekday afternoons, right after Guy Benson and just before the 790 KBC News Blitz with Randy Wang at 5. It's Mottek On Money. We are live on the air right here in 790 KBC, streaming live online worldwide at kbc.com. And yes, the on-demand Mottek On Money podcast, kbc.com, Apple, iTunes, YouTube, all your favorite podcast platforms. Another record-shattering day for stocks with the S&P 500 and the NASDAQ in all-time high territory. This after the U.S. struck a deal with Japan on trade, and this, of course, lifting hopes of further deals down the line and for further tariff deals as Wall Street prepared for Tesla and Alphabet earnings after the bell with the big cap tech names in focus after the closing bell. The Dow coming in for a closing gain of 508 points today. We're at 45,010. The S&P 500 up 49 points to a record high, 6,359. It started the day at a record high. And the NASDAQ at 127 at 21,020, also an all-time high. The volatility index pulling back today by 7%. Gold at 3,397 an ounce. And the oil today pulling back right now at around 65 and change. The deal with Japan placing a 15% tariff on imports from Japan, according to the president, stepped down from the threatened 25% tariff set to hit next week. And Tokyo will make $550 billion in U.S. investments. The president said it's a great deal for everybody. Now, this deal came up and also lifted optimism that more trade deals will be sealed before August 1st. That's the deadline date of when President Trump's tariffs kick in, the newly announced ones. The negotiations with the European Union, India, and other partners have dragged on lately. Treasury Secretary Bessent touting progress with China today. Economists believe that if tariffs average out at about 15%, that would be manageable for the global economy, limiting economic damage. After the closing bell, Tesla did report a slight earnings and revenue miss in the second quarter, but said its more affordable model, so-called more affordable model, was still set for 2025 production. And the Google parent company Alphabet beat expectations on the top and bottom lines this afternoon on the strength of its advertising and cloud business. On the economy, home sales declined in June as prices hit record highs. According to a new report today from the National Association of Realtors, sales of existing homes dropped more than expected in June, the latest sign that record high prices and elevated still mortgage rates extended the housing market's freeze after jumping in May. Sales last month fell 2.7%. According to the National Association of Realtors. The sales report today coming in worse than expected. Economists had forecast a smaller decline to a seasonally adjusted annual rate of 4 million homes. Spring, by the way, of course, historically the busiest time of the year for home sales, but right now all signs point to 2025 being another subdued year for the real estate market. Have you seen this? The meme stocks are in focus once again. Krispy Kreme, D-Nut is the symbol in that one. Open Door and Kohl's have been in focus lately. Heavily shorted stocks, and those so-called meme stocks have been popping lately. We'll take a closer look at that here in just a moment. In fact, let's get right to it right now on the markets, the economy, your money, and the whole works now. Joining us live, Gabriel Wisdom with American Money Management, based right here in Southern California, also author of Wisdom on Value Investing. Record-shattering day on Wall Street here with the S&P 500 and NASDAQ at all-time highs. The Dow, by the way, just below its all-time high. Good afternoon to you, Gabriel Wisdom.
Good afternoon, Frank. Record highs, we hear those record highs year after year, month after month, and it's a reality check. The stock market is the opposite of a casino. We've heard it referred to as a casino, but that's not the American economy. A casino is a place where the longer you play, the more likely you are to lose because the odds are mathematically stacked against you. But with the U.S. economy, with the financial markets, with investing, the longer you stay invested, the better your odds get. So time is your greatest ally, not your enemy. And here we are this past quarter with another stark reminder, a reality check of just how difficult it is to outguess the markets in the short run. We saw the stock market sell off in April sharply, and then we had the surprise announcement of Liberation Day, sweeping new tariffs. But June, no, we'd fully recouped our losses and returned to new highs, record highs in June, and here we are in July. So things are looking pretty good, Frank.
That is good news. And let's take a look at the stocks in the news this afternoon. Tesla and Alphabet Google. Tesla, we see here pulling back in after-hours trading now by about $14 at 318. Had close of 45 cents at 332.56. Let's start with that one.
But it's hard to recall any other time in our lifetimes when, in the automotive industry, a brand lost so much value so quickly. Maybe the closest example would be the decline in sales of Japanese and Korean brand vehicles back in China in the early part of this decade, which stemmed from the deep trade disputes. But the new tax package really hurts EVs and Tesla in particular. Plus, the political activist role that Elon played alienated half of the market worldwide. Not everybody is on one side of the aisle. So he says he's going to roll out cheaper Teslas, but he's warning of rough quarters ahead. So I'd expect to see lower prices.
Alphabet Class A stock, parent company of Google, in focus this afternoon as well. The stock had closed down $1 and change to $190, and it's moving higher now in after-hours trading, up $4 and change to $194. What about Alphabet Google here?
The reason why the shares slumped, Frank, has to do with the huge amount of money that Alphabet, Google, is committed to have to spend in order to improve its infrastructure and come up to speed on the artificial intelligence front. Now, there's some good news. There's America's AI action plan that was rolled out this week, and part of the goal is to build the infrastructure that's needed to power our country's AI future, and part of that is going to be to help fund some of these infrastructure needs of our major companies like Google, like Alphabet. Also, we have to invest in the workforce that's going to build and operate and maintain all this high technology AI. And I think that in the long run, this benefits Alphabet and the others.
All right. No conversation will be complete without talking about AI. And it looks like NVIDIA and their CEO back in the spotlight doing a high-profile interview on Fox today. NVIDIA shares up nearly $4 at 170 and change, at or near all-time highs. What about the magnificent one here now?
Well, you talk about whiplash. My gosh, back in April, this company fell so hard because of the inability to sell its high-quality chips in Japan, and that all changed. President Trump and the administration did an about-face, and now NVIDIA's back to above, the old record highs. This is a remarkable story.
They're selling in China again.
Yeah, it's China all over again. But they're selling those chips in China. But the U.S. also gave the nod to Advanced Micro Devices, which is a competitor. So I think there'll be more competitors, and NVIDIA's not going to have it all to themselves.
All right. It's been a while since we chatted behind live microphones, and things move pretty fast these days. We have the Genius Act signed into law last week. It was Crypto Week last week, and we did speak just about a week ago. But now that has been signed, sealed, and delivered, and a couple of other crypto bills are still hanging out there. We did see Bitcoin at a record high last week, above 123,000. It was hovering around 120,000 again this week. Right now at around 118. I know you're following what's happening with Bitcoin and the cryptos these days. So give us your reaction to that news.
Well, I'm especially following what's happening in the banking industry with regard to blockchain as creating raw efficiencies where time and cost of transferring interest-bearing cash can be reduced. Today, we learned that Goldman Sachs and the Bank of New York Mellon are teaming up to tokenize. They're going to use blockchain technology to tokenize assets. As of now, Frank, there are more than 40 tokenized money market funds, though most of them have less than $1 billion in assets, according to what I've read. But it's interesting how with this Genius Act, all the friction that existed seems to be, well, getting a little bit of grease now.
All right, and these meme stocks, some of them anyway, are back in focus. Krispy Kreme donut, for example, moving up nearly 5% today, up 19 cents at 432, and some of the other names have come back into focus. What about this new, relatively new meme pickup here once again?
Look, this is a retail investor's attack on stocks that had been losing market share, have seen declining revenue, declining earnings, and as a result, they're heavily shorted. Institutions, especially traders, will bet that on declining valuations for these kinds of companies like Krispy Kreme, like Open Door, like Kohl's, and then the amount of short sellers is so high that if you inspire retail investors to then pounce on the stock and buy it, it forces the short sellers to buy back the stock to close out their position. These are complex transactions, but short sellers have lost something like $350 billion since the market bottom of April 8th. And between April and May, short sellers lost more than $35 billion betting against the Magnificent Seven. So it's very dangerous to bet against Wall Street.
Will you touch any of those names you just mentioned, those so-called meme stocks here?
No, I no, because they don't meet my criteria for predictable revenue growth, earnings growth, and dividend. But I do like turnarounds from time to time. We got some good news from AT&T. This is a stock company everybody knows. Everybody's been a customer or is a customer, but AT&T has a big profit tailwind from the One Big Beautiful Bill Act, and they're expecting to realize about $6.5 billion, maybe $8 billion of cash tax savings this year into 2027. I mean, that's one that looks interesting to me. It's getting my attention.
All right, certainly getting attention this year. The metals, with gold hitting a record high this year, above 3,500. Right now, it's just above 3,400. Silver making a run for $40 an ounce. Right now at $39.57 here at last check. And platinum got close to $1,500 yesterday. Right now, we're at $1,456 on platinum. What about the metals here?
Well, gold, Frank, continues to be the perfect investment in an environment of uncertainty over the tariff agenda, over the dollar, and that sort of thing. Though, because jewelry prices have escalated as a result of the surge in gold, I agree with some analysts that we may see some topping here. I'm not sure gold will rise a whole lot over the next few months, but over the long run, I like it. Silver, on the other hand, I think silver could continue to go up significantly, and it's all due to industrial demand. They've already, seen a 31% increase, I think, year over year. But industrial demand from solar energy, from electric vehicles, from electronics, that's a big driver, and the supply of silver is tightening. And finally, I think you mentioned platinum. The slowdown in electric vehicle production and the rise in hybrids, this all favors one of the rarest precious metals in the world, and that is platinum. It's a component in automotive catalytic converters, and we need those.
All right, let's go from gold, silver, and platinum to Big Blue. IBM, International Business Machines stock. The company failed to deliver upside in its software segment during its latest quarter. It looks like the headline numbers out today exceeded analysts' expectations, but the stock looks like has come under pressure here. Let me see if we can bring up the latest here on IBM shares. Big Blue has seen pretty decent comeback as well. Certainly, right now down about 15 and after hours trading down to 266 to close down 5 cents to 282. What about IBM, which has been getting new attention lately?
Yeah, Frank, IBM was one of the worst performers of 2024, 2023 as well, but certainly it's a worst to first story, and the reason is a solid one. The thesis is good. They're catching up to everyone else in that space, but they're IBM, known worldwide. I think if the company can consolidate here price-wise, or just stay in this range for a period of time, revenue and earnings continue to grow, and a lot of it has to do with artificial intelligence and cloud computing.
On the air live with Gabriel Wisdom with American Money Management and author of Wisdom on Value Investing. Before we let you off the hook here, let me ask you the big question here. Any specific places where you are putting money now and or taking it off the table?
Well, Frank, since you mentioned IBM, a company that ate IBM's lunch back in the 80s, Microsoft, had a real problem here this past week. Microsoft SharePoint servers saw a huge number of hacks. Hackers breached about 400 government agencies and corporations and other groups. May have had something to do with some of the air traffic control issues that I experienced in the air over San Luis Obispo just yesterday. But in any event, I like this cybersecurity exchange-traded fund that has the cybersecurity plays like Broadcom, Cisco Systems, Palo Alto Systems, Northrop Grumman, and others. The symbol for that one is HACK, hack. And I'm very much about the electrification theme and the data systems build out. There's another one that owns all the big companies in that space, and that symbol, is ZAP, ZAP.
All right, we can remember those pretty easily. And before we let you off the hook here, we got record highs here for the S&P 500 and for the Nasdaq. The Dow just below its record high. Where do you see this overall market go from here?
Frank, the one flying the Chardonnay, as you like to say, would be
yes.
the transports. Increases in drivers' wages and casualty group medical claims and equipment-related costs have really hurt the big truckers like J.B. Hunt. The trucking industry in general has been under pressure since 2020. So there's less stuff being shipped. That tells me that this bull market is getting a little soft. It's getting a little tired. Not to say we won't have higher prices, but you have to be selective here.
Terrific. Gabriel Wisdom with American Money Management, based right here in Southern California, also author of Wisdom on Value Investing. Gabriel Wisdom, thank you very much for that thorough assessment as always, and look forward to speaking with you again very soon. Appreciate it very much, Gabriel Wisdom, live with us here on Mottek On Money on 790 KBC. Mottek On Money continues, 790 KBC, and the record-shattering performance on Wall Street continues with the Nasdaq and S&P 500 at record highs. The Nasdaq at 127, 21,020. The S&P 500 at 49 at 6,359. The Dow getting close to its record high, popping 508 points today at 45,010. The volatility index, the VIX index, the so-called Wall Street Fear Index, pulling back today by 7%. Taking a look at the yield on the 10-year note, that's the one that impacts the fixed-rate mortgage rates out there. We saw it pull back yesterday. Let's see what happened with it today. Can we get a drum roll here on this one? This is the one that impacts the fixed-rate mortgage rates, which, of course, is critical to the real estate business. We see the yield on the 10-year note is held pretty steady today at 4.38%. This on a disappointing reading on real estate today on the latest home sales. We'll take a closer look at that coming up. Also, commercial real estate will be in focus later this hour with Jerry Sullivan from the authoritative commercial real estate website, The Real Deal. He'll be joining me live later this hour. Tesla out with earnings this afternoon. The stock is down about $14 and after hours trading at $3.18 and change. Looks like a bit of a disappointment there. Tesla stock had closed up 45 cents at $3.32 and change during the trading day today. Google pulling back $1.11 today to $190.23. NVIDIA moving higher by nearly $4 at $170 and change. Dan Ives, the well-known Wedbush tech analyst, will be on this program tomorrow, by the way, at 4:05, so be sure to tune in. We see precious metals, holding up pretty well. Gold right now hovering at around just below 3,400 after blowing past 3,400 in the last couple of days. Platinum getting close to 1,500, right now at 1,456 an ounce, and silver is close to $40 an ounce. IBM, on its earnings news, pulling back a bit today, down about $15 at $266 and change. It had closed up 5 cents at $282.01. Open Door, one of these meme stocks, down 59 cents at $229. Let's see. Bitcoin. Let's not forget about Bitcoin. Just below 119,000 here right now. It was up around 120 yesterday, and of course hit a record high last week above 123, up about 300 right now at 118,748. Ethereum hovering at around 3,628. Solana at 190, and it looks like Doge is at 24 cents. And now the latest news on 790 KBC.
The United States Soccer Federation presents the U.S. Soccer Podcast.
The United States have the lead.
The United States in full command.
To the back post, settled, scores! Centering, doubling his tally.
Never miss a game.
Hooks it across, into the middle, and there's the opening goal. 2 for the United States.
Never miss a moment.
Barreling in, cutting in, going for goal, deflected and in! Yeah!
The U.S. Soccer Podcast. Follow and listen on your favorite platform.
Mottek On Money continues here on 790 KBC, turning now to real estate. Glacial is how the recovery effort is being described in the fire-ravaged areas here in Southern California. Now you have squatters occupying some of the areas that were burned in the firestorms, with people going to the DMV and getting licenses with addresses that were burned down. And now it's difficult for the actual owners to try to recover those properties. Very frustrating situation developing out there. Following all of this and more, and not only residential but the entire commercial real estate scene and the recovery here, Jerry Sullivan is with us now, managing director at the authoritative commercial real estate website The Real Deal, which covers Southern California, which Jerry knows very, very well, having been previously editor of the LA Business Journal and the Orange County Business Journal. Jerry Sullivan, thank you very much for taking the call here this afternoon.
It's my pleasure, Frank. It's always good to be with you.
Since you're the expert on all this and you're covering this terrifically on The Real Deal, give us an update here on what's the hottest news coming across your desk here this afternoon.
Well, I guess hot. Let's talk about the fire recovery, and it is glacial. I guess anything but hot, actually. And as you noted, there's some problems cropping up here and there, and there's some coverage that sometimes I'm not exactly sure what's going on out there. I will tell you our coverage, and tomorrow we'll have a piece taking a good, thorough look at one aspect of what's going on the Palisades side, and that's some of the contracts that the city talked about and maybe did do, maybe they haven't, with some of the contracting firms that would be in charge of this. Hegarty Consulting was one of them, and I believe there's some work with that might or might not be arranged with AECOM. And so we're going to take another look, a deeper look at that and see what's going on. That'll probably hit our website tomorrow. Other things going on. It's kind of a spotty market. We just had a scoop on the sale of the Benedict Canyon home that Gene Simmons, the former Kiss, I guess still with Kiss, but the musician, and filmed a reality TV show at this Benedict Canyon mansion. It just sold for $28 million, which is a pretty nice price, and up almost 50% since the pandemic. So, that was Beverly Hills. So you don't have to pay the Measure ULA tax there. That's helping sales. And so, we have that spotty market based on a lot of factors.
Gene Simmons, of course, not only the guy known for KISS, but a brilliant business guy. We've had him on this show over the years, and he wrote the book Me Inc., and certainly a terrific entrepreneur who has a great story to tell and has been honored heavily by various entrepreneur groups here as well. So Gene Simmons cashing in there in Beverly Hills, and actually, that's a great story.
There was a scoop by our reporter, Carrie Hamanaka. Gene didn't sell it this time. He had sold it previously, and now this is the second sale.
Oh, yeah.
He sold it. Yeah, he sold it in 21, and it's up about 50% since then.
Got it.
But I guarantee you, Gene's doing fine.
Yep, that's right, and that's his former place. So any place, anything that he touches or lived in, certainly it gets a terrific buzz and commands a big price. What about on the commercial real estate scene here now? You had called the bottom already months ago, and it looks like that has been the case. There are a few places in the world where office towers are being built. And that is the case in Century City, where they're putting the finishing touches on a brand new, very big office tower right there on Avenue of the Stars. I drove by there today, as a matter of fact, where they're also putting that subway station in there, and as part of the LA Metro expansion project there. So that is certainly big news. Century City looks great. What about that area and what's happening in the downtown Los Angeles area?
Century City continues as a strong point. And the new building coming out of the ground, proves that point. Downtown, one of the reasons it's strong is because downtown LA is not, and there's a bit of a zero sum going on there. So downtown LA remains bumping along bottom, and we just had a story about some industrial property out in the Inland Empire that sold, I think, for $250 a square foot. That's almost twice the price per square foot that some Class A downtown office space is getting. So the downtown vacancy rate is still in the 30s, I believe, and it's just, it's looking a little rough. Other aspects, a significant developer named Ben Ashkenazi, he just got worked out his loan or extended his loan on the Beverly connection, which is the substantial, maybe 300,000 square foot retail center next to the Beverly Center. And, this one has Saks off Fifth and a Marshalls and a Target. So it's a notch down in terms of the retail merchandising.
Ross there too. Ross is there too.
Yeah, Ross is over there. Yeah. And so, but he did manage to work, to get an extension on his loan, and that's a good sign. He got, I think, for $210 million. So that signals some confidence in a key piece of commercial real estate in the area. And so, again, we're starting to see some bottoming, some leveling out. And then, some areas, I think, going back to downtown LA, there's just, still some reckoning to be done there.
Yeah, a lot of issues there. And what about industrial? Something we don't often talk about, but the Inland Empire historically has been a very strong area for industrial real estate, with the Los Angeles area being the largest manufacturing region in the United States, which people often overlook or forget. But when you fly into LAX, you see all those big warehouses below you, representative of a tremendous manufacturing base here. And having worked closely with some of the real estate folks out in the Inland Empire, that is an area that's been hot for industrial. Any updates on how industrial is looking nowadays?
Yes, in fact, the item I just mentioned, which was on our website today, an outfit called Bridge Logistics. It's a unit of a big investor called Bridge Investment Group. They just paid about $250 a square foot on a 3-building deal out in the Inland Empire for its industrial logistics distribution center, $84 million total. And one of the reasons they gave for being that interested was that now there's a backlash against the development of industrial space out there, the logistics and warehousing, and the state and some of the localities are limiting, the ability of developers to put in new product, which of course, if you restrict the new product, what's there will increase in value based on scarcity. And so that was pretty much the play they cited. They said, it looks like the pipeline might be restricted, and so we're going to buy in now and try and benefit from that going forward. So You're right. It is a big, Southern California remains a big manufacturing center, and of course the seaport is a key factor in the rail lines, and so there's going to be value there, and we'll see what goes on with the attempts to restrict future development.
All right, and last but not least, the battle over ULA continues. We had one of the lead attorneys fighting ULA on this program recently. Any relief in sight for the high-end residential real estate transactions here in Los Angeles, and certainly it impacts commercial real estate in a big way?
No, I mean, I don't see anything that suggests to me that there's any imminent, that any legal step is going to turn this over. I think if it's going to get done, I think that it will either have to be done at the ballot box, and I think that will, the way it's been written and passed, the way it was written and passed, I think, and I'm not 100% sure, but they may have to take it to the ballot box beyond the city of Los Angeles. It might require a statewide vote, which would be tough for the entire state to essentially take such concern about, one city or one section. So that would be a challenge. I think the other path would be somehow to get the elected officials to figure out a way to roll it back or roll it off or offset it somehow. But I don't know. And I think, it's been a couple years now, so it's baked in. The economy's been a little spotty. Interest rates have had an effect. So I don't know. We've gotten a pure read on the effect just yet. But I can tell you that I'm sure the residential end of the local real estate industry would love to see it, repealed or addressed somehow.
Jerry Sullivan, Managing Director at the authoritative commercial real estate website, The Real Deal, which covers Southern California. Jerry Sullivan, thank you very much for that comprehensive update live with us here on Mottek On Money on 790 KBC.
Mic Drop, hosted by former Navy SEAL Mike Ritlin. It's raw.
Any single time that you left the wire, you could lose 4 guys.
It's unfiltered.
That was the most horrible screaming I'd ever heard. Taking a hit on the chin, you want to pay it back?
It's tough talk from the top minds in their field.
Would I choose to not do our duty as military fighting men? No, I would not make that decision, without question.
Mic Drop. Follow and listen on your favorite platform.
Mottek On Money continues, 790 KBC. Good afternoon. Nervous time for LA taxpayers, given the city's financial condition, government spending on the homeless also under scrutiny. Meanwhile, on the plus side, the big, beautiful tax bill has been signed into law this month, lifting a lot of uncertainty that clouded the financial future, and the SALT deduction is up to $40K now. Today, President Trump said the administration is now considering ending capital gains taxes on home sales to boost the housing market. When asked about the idea at the Oval Office today, the president told reporters we're thinking about that. Following all these developments very closely, joining us live now is AIDAN CHAO, the chairman of the Los Angeles County Taxpayers Association. AIDAN, thank you very much for taking the call here this afternoon.
Good afternoon, Frank. Thank you for having me.
You're on the front line of all this, so how are LA County taxpayers feeling nowadays?
Well, we feel cheated. I mean, right now we're looking very good with the big, beautiful bill. There's quite a few incentives in there for us Californians, like the SALT deduction. But when it comes down to us, our tax dollars, in the majority sense, are being cheated away from us with very little accountability. We're looking at homelessness today, homelessness, and that's what we talk about. That's what we're falling short on.
All right, give us your assessment of what's been happening as far as government spending on these various homeless initiatives.
Sure. Well, we just recorded a 4% drop in homelessness after the LA homelessness count conducted by the Homelessness Services Authority, LAHSA. However, what we just found out after some investigating from LAists is that a lot of these homeless people that had gone down in the numbers were not sheltered, but were moved. And the number of apartments built in 2024, slightly short of 3,000, were dwarfed by the 485,000 affordable homes that are needed. So right now we're looking at a very startling mismatch in terms of what the goals set out for the $1 billion that we've spent on homelessness thus far intend to do, and where we are, which is very far short. And we can see corruption by the now to resign LA homelessness director, as well as the city council, as well as the board of supervisors and mayor. We see this trickling down of union giveaways, of sweetheart deals with very little return to the taxpayer. And I mean, we've figured out that LAHSA lost a $5 million cash advance. They couldn't account for that payment. They also couldn't account for a payment made to the nonprofit of the homelessness director's husband. So we see all these millions of dollars in contracts being leaked away without any oversight. And right now, finally, they've yanked $355 million away from LAHSA after the feds started sniffing.
Laying it on thick, AIDAN CHAO, chairman of the Los Angeles County Taxpayers Association. This at a time when the city faces a budget crisis, and it looks like the city council is on vacation here at the moment.
Yes, they are on recess. They're soon to be back. Recess or not, though, the fact is that we're facing a budget crisis. They've declared it. I applaud the fact that they have recognized the issue. Now's the time to do something about it. And where we need to cut is not essential services like they want to, but it's the giveaways to SEIU. It's the giveaways to the teachers union, and it's the giveaways to all the nonprofits that they have funded with homelessness grants that have not returned the housing numbers, have not returned the shelter, have not returned the treatment that we were promised.
All right, and we're just about a little over 6 months following the horrific firestorms. Tragically, another body was found yesterday in Altadena, so the painful recovery continues, as it was described by one of our commercial real estate experts here a moment ago, as they reported a glacial pace of recovery in these fire-ravaged areas. Give us your assessment here of what's happened 6 months since this horrific disaster.
Well, I was just out there in the Pacific Palisades last week. I saw firsthand how much rubble had yet to be cleared. I saw firsthand the destruction for the first time since the fires. I hadn't been out there, but what I see is that we are punishing, especially in the city of LA with the Palisades, the homeowners who lost their homes. A lot of these homeowners will be priced out of buying their properties back, of being competitive with the state, which is attempting to buy some of this land because of Measure ULA, which is the real estate transfer tax that has been taxed on to all purchases over $5 million, which is in reality a lot of the prices of property in the Palisades. So right now, LA is pricing people out and trying to create an agenda of affordable housing in neighborhoods with single-family homes. We don't think that's correct. It doesn't respect the nature of these neighborhoods that were ravaged, and we're very sad to see that that's the state of the rebuilding plan, even though it's moving so slowly because of the lack of coordination between agencies, as well as the very slow process of permitting and plan checks.
AIDAN CHAO, chairman of the Los Angeles County Taxpayers Association. We'll keep an open line to you, AIDAN. Thank you very much for that important update this afternoon. Look forward to our next update with you. AIDAN CHAO with the LA County Taxpayers Association live with us here. Stay tuned now to the 790 KBC News Blitz with Randy Wang. I'll be back with more at 4 tomorrow afternoon right here on 790 KBC.
Vince Colonnese is redefining news talk.
Hi, I'm Vince Colonnese, host of the Vince Podcast. These conversations where we can air all of this out without the filters, without the censors, without people with judgment, that's how you get a healthy country. Adult, reasonable, sober conversations. That's all I want.
In-depth interviews, live caller interactions, and a front row seat to the most important conversations of the day.
That's why I'm so grateful that we get to do this every day. You are really the best damn audience in media.
The Vince Show.
Follow and listen on your favorite platform.